Self-invoicing under GST. Section 31 subsection 3 clause F of the CGST Act states that all registered person making purchases from unregistered suppliers where reverse charge mechanism is applicable under GST should issue self-invoice. This self-invoice is to be issued within a period of 30 days from the date of receipt of supply of goods or services as per rule number 47A. The number of self-invoices issued during a particular month is to be reported in GSTR-1 table number 13 point number 2. Also, the value of reverse charge liability is to be mentioned in GSTR-3B table number 3.1, and the eligible and available input credit can be claimed through table number 4 of GSTR-3B. For self-invoices, e-invoicing is not applicable since e-invoices generally apply for B2B transactions, and also in here the supplier is an unregistered person and the recipient need not generate e-invoice for self-invoices. Rule number 36 states that input tax credit on reverse charge supplies can only be availed based on properly issued self-invoices under section 31 subsection 3 clause F. So make it a point that in order to claim the input for RCM paid, the invoice is self-invoice is the base document to claim the ITC. Also, in a clarification issued by CBIC, it is stated that the relevant financial year for availing ITC is the one in which the self-invoice was issued, affecting timely availment under section 16 subsection 4. So the wording of financial year or relevant financial year quoted in section 16 subsection 4 is that financial year in which the self invoice is issued. If self-invoice is not issued, penalty under section 122 can be levied, that will be up to 25,000 under CGST and up to 25,000 under SGST. If self-invoice is not issued and the payment of tax of RCM is not made, then the SC will be liable to pay interest at the rate of 18% per annum, and also the tax authorities may deny the ITC, quoting rule number 36 of the CGST rules.